Hey, out there in YouTube land, welcome again. This is Brian Parker, Know Before You Owe, Vice President, Monarch Mortgage. We want to talk a little bit today about why you should buy instead of renting. And let's just get the big monkey out of the way right now. When you're renting, you're paying somebody else's mortgage. So the rental property we have down the street, I appreciate them guys every month when they pay their mortgage on time. I want to help you build that equity and wealth that person down the road is helping us build here at our house. So the number one reason to buy a home is so you can build equity. You're paying yourself. Every payment you make, you own a little bit more of the home. You have more money that can help you buy the next home. Okay? You're not giving it to the guy down the street so he can go build that net worth that you want to build for yourself. Number two, tax benefits. One of the big things that you or I as a consumer get to do is we get to deduct the mortgage interest that we pay on our home loan in our yearly taxes, which can give us a very good tax break and help us toward either not paying taxes or getting us a refund back. I'll caveat by saying that it's natural for you and I as a consumer to want to get the lowest rate on everything. And I get it. And right now, if you're watching this video, we're not in the lowest rate environment. We're a lot better right now than we were about this time last year. But the difference between paying, say, a 6% rate and a 6.25% rate might make a $30 or $40 difference in your monthly payment. And I get it. Every bit makes a difference. My wife and I, we've got 5 kids. They're pretty much grown now, ages 19 to 28. But $40 can go a long ways. But flip that to where if you did pay that 6.25% interest and you paid more interest during the course of that year, as long as you don't exceed your maximum deduction based on what your tax preparer says that you can qualify for, by paying more interest, you gave yourself a little bit better tax benefit when you're filing taxes the next year. So just keep that in mind. Third benefit, long-term financial stability. If you're on a fixed rate, it will not go up. Well, let me correct that. Your mortgage payment related to principal and interest will not go up. Now, could your insurance go up each year like we've seen it happening right now? Yeah. Could your taxes go up occasionally because your county raises the tax rate? Yeah. But if you're borrowing $200,000 at 6%, that payment, principal and interest, will never go up. Unlike your rent, that on average increases by about 6 to 8% per year, depending on what market you may be living in. So having that fixed financial stability is a great benefit. Fourth benefit, appreciation. You know, the number one benefit was building equity, okay? And you do that by making your payments. But number 4 should actually go right behind number 2, appreciation. Depending on what market you're in the state that you may be looking at me right now, you're probably getting anywhere between 3 to 5.5 to 6% appreciation per year. So if you bought a $300,000 home this year and you were getting 3% appreciation per year over the next 5 years, then your home is probably going to be worth somewhere between $325,000 to $335,000 over the next 5 years. You just made yourself some money. Now, maybe when you get to that time, you want to sell the home and take that and use what you can gain from your appreciation and what you paid down in your principal and interest toward a down payment on a new home. Great idea. Thumbs up. Absolutely. But maybe the property that you're wanting to move out of right now might be a really good rental. And you have the finances to leave this home alone, let it become a rental for you, and then go buy the next home with what you may have built in your assets. Now with that takes you to number 5. You're building wealth. Real estate is the number one place that you can build generational wealth. for yourself and for your family. I won't elaborate it too much, but my parents grew up pretty poor. We got, my sister and I, we got what we wanted if we deserved it and we worked hard for it. But my parents had to bust their rear end to provide for it. They grew up on farms. Both of them just a high school education and all that. And my father's still alive. He's 86. But what he did in his construction business and my mother in her real estate business are going to leave me and my sister in a really good shape when that time comes. And we're not hoping for that anytime soon. But think about it. You can pay the guy that lives somewhere else for the apartment or the home you want to live in right now, or you can start building wealth for yourself and your kids to come. I'm Brian Parker. Please reach out to me if I can be of any help to you. God bless you. Hope you have a great day.